Hey guys, this is my silver bullet, 2 p.m. to 3 p.m. New York local time or Eastern Standard Time. That's when we anticipate the silver bullet for the New York afternoon session. So I'm implementing that together with model 2022 here. You can see we had a high taken, displacement lower, creating a fair value gap, and I went short. So that green shaded area is a fair value gap on the daily chart. So I was watching whether we'll have some premium sensitivity there. The two blue lines that you can see are gradient levels of a daily week. Remember, weeks are gaps, so that's high time frame. So I was watching two things there: that gradient level plus the low of the green shaded area, which is a fair value gap on the daily charts. It's a BC buy side imbalance, sell side inefficiency on the daily charts. You can see we've shown very nice sensitivity there. As we were returning to retest the fair value gap after the displacement, you can see the wick just touched that blue level, which is a gradient level on the daily wick, and then we were not able to close above it. So that gave me confidence that it will most likely move lower. I was already anticipating that. So you see now we are moving through the first presented fair value gap in the EM session. What else do you see agreeing that's first presented fair value gap? I see a breaker, high, low, high, high. High, where did it originate from? That fair value gap that I've annotated is a fair value gap that took out liquidity. So I now want to see it used as an inversion fair value gap. I'll not change the color here, but I'm watching. So once we go through it and close below it, any return to retest it should see price respect the upper half. Should not see a body closing above the consequent encroachment or the midpoint of that fair value gap. If it is to be a valid inversion fair value gap, those are the signatures ICT has taught us to look for when trading inversion fair value gaps. So I would like to see displacement lower from here. I don't want to see so many candles retesting that first presented fair value gap. That was my alarm to notify me when we go below that low. Now since we've gone below that low, below the breaker, I'd like to see momentum moving lower. Remember, if it cannot even return to retest the breaker, it's a sign of weakness or being heavy. So that would be a nice indication that it will move very quickly towards the sell side liquidity pool. So again, you can see I'm targeting relative equal lows, and what's just below those lows is a gradient level of the daily wick. been waiting for the markets to start trending. Since January, we've been in a very terrible consolidation on the daily charts. So I've spent most of my time watching, but I had opened the WhatsApp channel, which that's why I've been active. A couple of guys following. It's free. I'm not charging anything. And the link to join is on the description. You can join if you want to see regular updates, but if you just want to see executions and reviews, you don't have to follow that channel. Because now I've resumed recording my executions and I'll be posting them here on the YouTube channel. So we've now closed with conviction below the first presented fair value gap in the afternoon session. It is better if it doesn't go back to retest that first presented fair value gap and just keeps dropping from here. And now I can move my stop loss just below where I entered to remove any risk on the trade, because I don't anticipate price returning back to that first presented fair value gap or the high of the bearish breaker. I'm now in a very nice position, because even if it was to reverse on me and go and take me out, this will not be a losing transaction. So this is model 2022. Inside the 2 to 3 p.m. silver bullet hour. After showing premium sensitivity on two key higher time frame levels. Key levels, the low, the fair value gap in green, and the gradient level of the daily wick. You see several things in favor of this setup. And again, the targets, two things: the relative equal lows, which is a liquidity pool. Remember, liquidity is the lifeblood of the marketplace. And just below that, we have another gradient level of the same daily wick. So because we have that, I'll not take a partial. I'll not strangle the trade. I'll not try to move my stop loss, but I'll hold to see whether we can reprice aggressively and take out that liquidity pool and reprice to the key level, the higher time frame key level, that gradient of the daily wick. Remember, wicks are gaps. It's something ICT has been teaching us recently. So that's why I'm confident it's likely to reprice there. So I'll now just submit to time and see how we deliver. It's possible for it to return to the first presented fair value gap, but I would prefer it doesn't do so and just now tanks and engages that limit order. And the reason why sometimes the market will do that is so that they don't allow the guys who had been buying and they have their stop losses below those two relative equal lows, which retail will see as strong support. So smart money will cannibalize on that, and if it starts retracing or moving slowly towards that liquidity pool, it will allow those guys to pull their orders, their stop loss orders. So that's why sometimes the algorithm will price very aggressively and take them out. And you're likely to see that now. It's in striking distance. There you go.